Stacking physical gold and silver, the coins, bars, and rounds that we all love so much, it's not the same thing as investing in precious metals. So let's talk about the differences and also why you might want to consider doing both. Hey everybody, Smart Silver Stacker here. I want to say a big thank you to you for tuning into today's video. If you enjoy it and you get some value from it, please give it a big thumbs up down below. And if you'd like to see more videos about gold and silver, why not subscribe to the channel? Okay, so we all know what these are, right? Dollar bills, otherwise known as Federal Reserve notes. And for all the hate that we stackers might throw at them, these are actually pretty useful things to have around because think about what they really are. At the end of the day, the dollar, as well as all the other major currencies around the world, are basically colorful coupons that we all agree have value. And that actually makes them very useful for a variety of purposes. You can pay your light bill with dollars, it's how we pay our taxes, and you can also go down to the store and buy yourself a jar of peanut butter with them. Pretty much anything you need to purchase can be acquired with enough dollars. But one thing fiat currencies like the dollar are not very good at is storing value over the long term. According to the St. Louis Fed, the dollar has lost approximately 97% of its purchasing power since the Federal Reserve was created in 1913. That's why my preferred method of saving for the long term is in hard assets. Physical gold and silver bullion, the type of money the supply of which cannot be expanded by a printing press or by typing a few numbers into a computer. But notice that when I talk about stacking physical gold and silver, I refer to it as saving, not investing. The reason for that is that these coins and bars, they don't produce anything. I don't get any yield from holding on to them, and I'm not counting on the purchasing power of the metals to increase. Now, it is certainly possible that other assets could fall in value along with the dollar, and perhaps gold and silver won't. And that would mean that on a relative basis in the future, you may be able to buy more with your physical bullion than you can today. But that is not my motivation for stacking gold and silver. I'm just betting that the fiat dollar is likely to continue its inevitable decline, and I want at least some of my savings protected from that fall. But if you believe, like I do, that we may be on the cusp of a major bull market in the precious metals, then a case can certainly be made for investing some capital as well to take advantage of that move. Quantitative analyst Nasim Taleb, who you might recognize as the author of The Black Swan, writes in his book Antifragile about a barbell strategy, which involves, first and foremost, securing yourself from risk and fragility. As he puts it, before you seek to profit, it's a good idea to first survive. The barbell approach can be described as a bimodal strategy with a portfolio heavily weighted at either end of the risk spectrum, with few assets allocated to the middle. This strategy entails playing it safe in some areas, making yourself robust to those negative black swans, unpredictable or unforeseen events, typically ones with extreme consequences, and at the same time, taking a lot of small risks in other areas to leave yourself open to positive black swans. In other words, extreme risk aversion on one side and significant risk loving on the other, thus helping to achieve what Taleb describes as anti-fragility, a characteristic of being not only able to survive extreme unexpected events, but to thrive from them. So how can this apply to the precious metals? Well, for the first half of the equation, let's say that you put 90% of your precious metals portfolio into savings in physical gold and silver, assets without counterparty risk that have served as a store of value for thousands of years. You have then successfully limited your downside risk, particularly if you are measuring your wealth in ounces. The number of ounces you own is not going to change, regardless of what happens in markets. That leaves 10% of this metals portfolio to be allocated into riskier assets, like, for example, gold and silver mining stocks, with junior miners offering the most risk, but also perhaps the greatest potential for reward. In this manner, you can mitigate risk while at the same time exposing yourself to massive upside potential. And according to Taleb, this is a better strategy than, say, allocating 100% of your portfolio into what might be considered medium risk assets, such as blue chip miners or precious metals ETFs, which could expose you to complete ruin in the event that you miscalculate the risk profile of those assets. Now, the 90% 10% ratio that I used in that example is just that, an example. Everyone's risk tolerance is different, and I'm certainly no financial advisor. Of course, nothing in this video is financial advice. I'm just sharing with you my thoughts, and I do think that there is wisdom in this barbell strategy, and it is one that I have applied in my own metals portfolio. And on this channel, I've talked pretty extensively about the first half of that strategy, saving in physical gold and silver. I have had some requests from viewers in the comments section to give my take on gold and silver stocks. I've hesitated in the past because I'm not a stock market analyst and I'm not trying to put off guru vibes, but when I was recently contacted with a request to make a video on behalf of a company that I've owned shares in since May of 2022, and one that I believe is an excellent candidate for the barbell strategy that we just discussed, I took it as a sign, and today we will be digging in and looking at the numbers for today's video sponsor, Gold Mining Inc., ticker symbol GLDG. Gold Mining Inc. is a mineral exploration and mining company focused on the Americas. They operate a diversified portfolio of gold and gold copper projects in Canada, the US, Brazil, Colombia, and Peru. Now, one reason that I like GLDG is that when I buy shares, I'm in good company. Among the major shareholders are Doug Casey, Rick Rule, and Eric Sprott, perhaps the biggest and best name in the entire gold mining industry. And let's talk a bit about the performance lately of the gold miners, specifically the junior miners. This is a chart that goes back to the September 2022 lows in the price of gold. The candlesticks on the chart represent the spot price of gold itself. The blue line represents the GDXJ, an ETF that tracks a basket of junior gold miners, and the orange line is GLDG. Since gold began its rally in September from those lows, its price has run up more than 18%, while the GDXJ has risen more than 52%, and GLDG is up better than 74%. This performance is indicative of the leverage to the spot price of gold that a junior miner like GLDG can provide, and this has been demonstrated historically over the past decade through several of gold's moves higher. One reason that a stock like GLDG can move so much faster than the spot price of gold is that once the spot price reaches a point at which the gold producer is breaking even smaller incremental moves higher in the metal can have a disproportionate positive effect on the company's earnings. Another reason is the additional risk that's involved. More risk, more potential reward. And with GLDG, and any mining stocks for that matter, there are a lot of risks for investors that you just don't get exposed to with physical bullion. There's jurisdictional risks where the mines themselves are being operated, there's a lot of moving parts within any business, and then there's also the human element. But that one can also be an advantage. In the case of Gold Mining Inc., co-founder and chairman Amir Adnani has done a fantastic job of acquiring undervalued assets. You can see from this chart that the cost of acquisitions that Adnani made from 2012 to 2020 was $81 million. And at their peak, those assets had a combined market cap of $850 million. So he has been adding a tremendous amount of value for investors by buying up these assets for literally pennies on the dollar. Now, going back to that same chart of the miners that we looked at a moment ago, despite the fact that GLDG has had a big run up since September, if we zoom that chart out and go back to gold's peak in March of 2022, you can see that while gold is only down slightly from that peak, the miners still have a significant way to go to recover their losses from that time. And if we examine the numbers, I believe there is still a tremendous value to be had here with GLDG. That's why I just added more shares to my position earlier this week. At the time I'm making this video, with a share price of $1.34, Gold Mining Inc.'s market cap, that's the total value of all the outstanding shares, sits at just over $223 million. One of the major assets Gold Mining Inc. owns is 20 million shares of Gold Royalty Corp., ticker symbol GROY, a gold royalty company that GLDG has already spun off. I've talked about royalty companies a bit in the past and how they provide financing for gold and silver miners and then receive recurring payments from those companies in exchange. They're a great asset to own during periods of high inflation because those payments from the miners are made every time they pull metal out of the ground. They come out of the company's revenues, not their profits. So even if the cost of production for the miners rises, GROI still gets paid. And at today's price of $2.48 per share, that chunk of stock is worth around $49 million. If we subtract that from GLDG's market cap, that leaves us with $174 million. That's a pretty wild number when you compare it to their gold reserves, because if we look at the portfolio of projects that they control, Gold Mining Inc. has gold equivalent reserves of greater than 32 million ounces. And if we do some quick math and simply divide that remaining market cap of $174 million by those 32 million ounces of gold reserves, it gives us a price of $5.43 per ounce. Now, I'm not saying that the gold that they have in the ground should be valued at the spot price. After all, it's a lot of work and time and money to extract that gold and turn it into a bar or a coin that you can hold in your hand. But still, gold in the ground like this is often valued much higher than $5.43. In fact, the industry average is closer to $30 an ounce. And this math is a big part of why analyst price target for GLDG is as high as $6.25 per share, more than 4 times higher than today's price. Now, on this channel, we have gone over at length a number of factors that could lead to much higher dollar prices for the precious metals moving forward. First off, we've got global de-dollarization, like how the Saudi Arabian finance minister just mentioned at Davos that the Saudis were open to pricing oil exports in currencies other than the dollar. Then there's the staggering levels of public debt in the US, now sitting close to $31.5 trillion, not to mention the more than $170 trillion in unfunded liabilities, levels of debt and public spending that can ultimately only be financed via the printing press and debt monetization by the Federal Reserve. And of course, we also have central banks around the world snapping up gold at a pace that we haven't seen in more than 5 decades. Now, I'm not going to get too deeply into my bull case for gold and silver in today's video, but if you have been watching for a while, then you know that, in my opinion, the writing is already on the wall, and we may just be one disruptive event away from much higher prices for the precious metals. And when that happens, and investors get wind that this rally in gold and gold miners is for real and that it's just getting started, stocks like GLDG have the potential to move, and move fast. That's why when it comes to this riskier half of my barbell approach to gold and silver, I believe it's even more important to be maybe a little bit early rather than even a minute too late. Now, don't go out and buy this stock just because you saw me feature it in this video. Make sure that you do your own due diligence. A great resource for more information about Gold Mining Inc. specifically is goldmining.com. If you do want to take on a bit more risk as part of your precious metals portfolio and give yourself some of that big upside exposure, Gold Mining Inc. is definitely worth checking out. Now, if you've watched this far, I know that you're a channel diehard and I do really appreciate it, but before you go, do me one last favor. Leave me a comment down below to let me know what you think about the barbell strategy and how it applies to physical precious metals and mining stocks. Stay safe and happy stacking, everyone. Smart Silver Stacker, out.